Right now, as you're watching this, 106,000 Australian families are trying to find a home that does not exist. And by 2030, that number could hit 262,000 families. And if you think housing crisis is bad now, you haven't seen anything. Hey everyone, welcome back to the channel. If you're new here, I break down property trends, investment strategies, and real data that moves the market. And today, we need to talk about Australian housing shortage. Not the version that you hear on the news, but the actual numbers. The government reports, the forecast that should honestly keep every renter, buyer, investor up at night. Because here is the thing, this isn't just crisis for people looking for a home. It's one of the biggest investment opportunities of the decade, if you know where to look. So in the next 12 minutes, I'm going to show you exactly how bad the shortage really is, which cities and regions are the most affected. What does it mean, for rents or prices in your portfolio, and where the smart money is moving right now? All right, let's start with the headline number. Between 2023 and 2027, Australia is projected to fall short by 106,000 homes. That's the gap between how many new households are forming versus how many actual new homes are building. Now that's just the next few years. Let's zoom out a bit. The National Housing Supply and Affordability Council, which is basically the government's official scorekeeper on the housing, just released their latest forecast. And it's brutal. Under current policy settings, we are on track to build 938,000 homes between 2024 and 2029. The government's target is 1.2 million. That's a shortage of 262,000 homes. Even after accounting for demolitions, we are still 79,000 dwellings short by mid-2029. Let that sink in for a second. 79,000 families who would need a place to live, and there would not be one waiting for them. So why are we falling so far behind? Three big reasons. Number one, population growth is higher than expected. The net migration have been smashing the forecast. More people arriving to Australia, fewer homes being built. It's simple maths. Second, construction costs have exploded. Material, labor, land, everything is more expensive. Builders are struggling to keep projects profitable, so fewer homes are getting started. This includes me as a developer myself as well. And third, community oppositions and the red tape. Now, the new development gets blocked, delayed, watered down. Everyone says we need more housing, just not in their neighborhood. And the result, a supply crunch that's only getting worse. Now, not every part of Australia is suffering equally. A recent study looked at 330 regions across the country and identified 5 markets which are in most serious trouble. Number 5, Gladstone, the regional Queensland. The listings are down by 31%, building approvals down by 48%. Number 4 on the list is Mackay, also a regional Queenslander. Listings down by 40%, approvals down by 50%. Number 3, Joondalup, Greater Perth, listings down by 31%, approvals down by 62%. Number 2, Bayswater region in Bassendean, again in Greater Perth, listings down by 21%, approvals down by 65%. And number 1, Fremantle, this is again Greater Perth, listings down by 29% and building approvals down by 77%. If you're a Perth or a regional Queenslander right now, you are watching supply completely collapse while population growth continues to happen. And that creates something very, very interesting for investors. And we'll get to that in just a minute. Okay, so let's talk about what this shortage actually means for everyday Australians. First up is renters. Right now, the national rental vacancy rate is just around 1.3%. That might not sound extreme, but anything under 2% is considered a crisis mode. What does that mean in practice? It means if you're looking for a rental right now, you're competing with dozens of other people for the same property. Landlords can afford to be picky and choosy, and they can keep the rents up, and it would keep climbing up. Annual rent increases have slowed down a bit from 8.5% in late 2023 to 5.5% by mid-2025. But here's the kicker, that's still faster than the wage growth. So renters are getting squeezed harder and harder every single year. And get this, according to Anglican 2025 rental affordability snapshot, only 0.7% of available rentals were affordable for someone earning a minimum wage full-time. For an age pensioner, 0.3%. That's not a housing market, that's a bloody crisis. Now, if you're trying to buy a home, it's not much better. Prices have been climbing in most markets, driven by the same shortage, low supply, steady demand. Prices go up. That's eco one-on-one. Now, here is where it gets really tricky. Interest rates have been elevated, borrowing capacity is down. So even though that there is not enough homes, a lot of buyers are stuck on the sidelines, unable to afford what's available. And so first-time buyers, they are getting absolutely squeezed. You don't need a bigger deposit. You need to borrow less, and you're competing with investors who can outbid you any day of the week. So the dream of this home ownership for a lot of Australians is slipping further and further away or out of reach from everyday Australians. And this isn't just about data and charts. This is affecting real people. The essential workers in regional areas like the nurses, the teachers, the aged care staff, they can't find housing near where they work. Some aged care providers are literally converting motels and buying prefab homes just to house their staff, and that's why the big demand for co-living properties. Families are living in cars. Young people are stuck at homes with their parents well into their 30s, and retirees are being priced out of rental markets they've lived in for decades. And this is the human cost of housing shortage, and it's not going to get better. It's only going to get worse unless something changes. All right, so I know that was really heavy, but here is where we flip the script. Because if you are an investor or someone thinking about getting into the property, this shortage represents a massive opportunity for you. And let me explain. In property investing, there is one golden rule. Buy where the supply is tight and the demand is strong. Right now, you've got entire regions where supply has collapsed. It's not just tight, it's collapsed. But population and employment keeps growing, and that's the perfect storm for capital growth and rental yield. Remember, those 5 worst affected markets I mentioned earlier, the Fremantle, the Joondalup, the Bayswater, the Mackay, the Gladstone, those aren't just crisis zone. They are also the opportunity zone. Let's break this down. Perth, it has had years of underbuilding while the economy strengthened. The mining, the resources, the infrastructure projects, jobs are coming back, but the housing way behind. That imbalance has to correct. When it does, the prices will rise. Regional Queensland like Mackay or Gladstone are resource-driven towns. With steady employment, the supply has tanked, but these towns aren't going anywhere. Investors who could get in now could see serious upside as supply struggles to catch up. But it's not about these 5 markets only. Across Australia, anywhere where you can see strong population growth, low vacancy rate, and constrained supply is worth watching. Do your homework, look at vacancy rates, check out building approvals, follow where the infrastructure money is going. Those are your breadcrumbs. Now, what should you actually do with this information? Here is 3 practical key takeaways. Number 1, if you're already an investor, review your property portfolio. Are you in the markets with strong supply or demand or fundamentals? Are you in oversupplied areas that might stagnate? Now is the time to assist. Number 2, if you're looking to buy, prioritize markets with structural undersupply. Don't just chase, the latest hot suburb, or look at data where the approvals are down. Look at the vacancy rates. That's your signal. Don't just follow the next hotspot. And number 3, think long term. The shortage isn't getting fixed overnight. The government is ambitious, but even if they hit their targets, we are still playing the catch up till 2030. That means years of sustained upward pressure on rents and prices combined, which would move the markets in the right direction. So if you are a smart investor, you would position yourself now. You could ride this wave for the next 5 to 10 years, and that's the full picture. Australia's housing shortage is a lot more worse than what people realize. But if you understand the data, you can turn crisis into opportunity. Now, if you found this helpful, do me a favor. Hit that like button, subscribe if you haven't already done so. Drop a comment letting me know, are you seeing this shortage out in the local areas? Are you looking to invest? I read every single comment and I love hearing from you all. Thank you for watching to me. Thank you for supporting us. Take care. Keep smiling. Keep investing. This is Moss checking out. Adios.